I have actually been involved in this, creating this new industry for over 2.5 years. I met up with some of the principals of the startup exemption, Sherwood Neese, Jason Best, and Zach Cassidy Dorman, and we partnered together with a bunch of other people and actually helped to write the framework for the bill. And then we went to Washington, and as you know, on April 5th, President Obama signed the Jobs Act. Within the Jobs Act is not something that we actually wanted, but it's sort of what we're stuck with right now, which is a series of disclosure on this part of the issuer, the entrepreneur. We wanted disclosure, but the disclosure, some of the things that they've implemented, like audited financial statements, we feel are going to be extremely difficult for a lot of entrepreneurs. I have a business, I have a software business called Funding Roadmap, and my product is a business plan reporting system and a business planning tool and reporting system, and it's now crowdfund compliant. So what I'm going to do today is to take you on a tour of this product so that you can see how much easier it would be to help entrepreneurs get prepared to be able to present their idea to potentially hundreds or thousands of investors in real time off of a website called the Funding Portal. So Funding Roadmap is all of the information that you would need to disclose to really make the best case about your company. But before you can do that, you have to actually take the steps to build a company. And one of the problems with a business plan today is that it's sort of a forced upon document that people don't really, they're not willing to defend the information. In fact, a lot of them use software products where they didn't even originally write the content in the business plan. So what we've built essentially is a benchmarking planning tool where we take you through everything from market analysis to industry analysis, the operations of the company, a marketing strategy, customer acquisition plan, pricing strategy, what is the special and unfair competitive advantages, what do you have a management plan, a personnel plan, what's your break-even point, what's the cash burn rate. These are things that you have to understand yourself, and then you have to be able to articulate this information to your team, and now eventually to a world of potential investors who want to be convinced that you're a better bet than all the other hundreds or thousands of issuers that will be on a funding portal saying, take a look at me. No, take a look at me. I mean, you'll be in competition. And normally in venture capital, angel capital, an angel investor is looking at one business plan at a time. But on a funding portal, they're going to be bombarded with all of these solicitations from these different issuers, and for an entrepreneur to be able to stand out from everyone else, they've got to make the best case possible. So what we did is we wanted to assist the entrepreneur by creating a multiple choice format. So all of the generic questions have drop-down menus, and you just pick the one that's applicable to you. And if you're in a startup and you don't have any information, then now this reporting system and planning tool becomes an education, because you're going to learn an awful lot of information in all of these drop-down menus, and you're going to be able to make decisions based on the ones that are most applicable for your success. And as you fill this out and create this report, you can go back into the table of contents and you can check the boxes off that are next to each question. And then you can, I'm having a little bit of a slow internet today, unfortunately. So each one of these have little check boxes. And what this does is it helps you to see how much of this you've completed. And then it also tells the investor or the lender who's going to come into this system and exactly what, how much of this you've completed and what it is that they should look at. The second thing that we did that's unique to this product is we built a due diligence report into the planning tool, which is, we actually have a patent on this product. One of the problems with people trying to raise money is they get to the due diligence process, they get a due diligence checklist, and they realize they haven't completed any of the information on there to go through the due diligence process. So what we've done is we've created this type of system where we're educating the applicants ahead of time and forcing them to compile all this information, you know, about the people responsible for their financial records, you know, all of the shareholder information, insurance policies, whether there's any criminal proceedings or petitions filed by principals, any, you know, litigation actions, have they copywritten, trademark, patent their idea, what kind of licenses and permits do they have, what kind of employment agreements have they signed. You know, it's pretty common for a lot of startups, for example, to sign away a lot of the equity in the company to a web designer, for example, because they don't have any money on the front end to build a website. So all this information now, again, it's compiled in the same format as the rest of the funding roadmap. Every question is hyperlinked directly to the answer. And this way, again, when investors and lenders log in to review, they can get to the question that they care about most quickly. And this helps to speed up the review process. So just imagine if you were a funding portal and there was 100 or 1,000 issuers on that funding portal that wanted to do business with you. How would you possibly go through all this information if it was in Microsoft Word or Google Docs or Open Office or a PowerPoint slide deck and know that they had completed all of this and were compliant? With this type of standardization, it's essentially like TurboTax. It's like the same, it's like a standardized form. And then what we did is we took this a step further and we built a crowdfunding report so that once you finish, you could be crowdfund compliant. This is all of the stuff that is required that we know about in the Jobs Act: the name and legal status, address and website, the name of directors, officers, and 20%, a description of the business, anticipated plan of the issuer. When you click here, it takes you back to the business plan section and all the other information that is part of the Jobs Act. And if you're not familiar with the Jobs Act, you can read it. This is the list. It's on Crowdfunding Roadmap under Jobs Act. And all of these things that you're required, like financial statements, if you want to raise more than $100,000, but less than 500, you need to have certified financial statements. And if you want to raise more than 500,000, up to $1 million, they have to be audited. You also have to have a valuation, proper valuation of the offering and the method that you used for determining the price. You have to have a description of the ownership and capital structure of the issuer, including a lot of detail about the terms of the securities being sold. Obviously, you have to have tax returns and all kinds of other information. So what we did is we wanted to simplify and standardize this type of reporting, and so we integrated a crowdfund report. And every one of those statements that you have to disclose, there's a placeholder in this report. And this report becomes really important when funding portals are looking for quality deal flow. They need to be able to discover entrepreneurs that have completed all this information, and they're going to have a really hard time doing this with by advertising, for example, in Facebook or in Google, because those environments may have 900 million people in them, but they're not going to have necessarily people who are compliant with all this information. So what we did is we came up with this idea for a hatchery. And the crowdfunding roadmap hatchery requires you to complete your business plan and then obviously complete the crowdfund report. And then you could subscribe to the hatchery, and you just check off these boxes and you put in the information about your offering. You explain what kinds of social media you have. For example, if you have a Twitter account with lots of Twitter followers, if you have a Facebook page with lots of Facebook fans, these are going to be important things to your success in crowdfunding, because crowdfunding isn't just about being compliant, it's about having social capital. And social capital means that if you Google my name, for example, you're going to find a lot of things to create validity in who I am in the business world. And also, if you go to my Twitter page, you're going to see that I have, 26,000 followers. So there are people in the world that have validated my idea long before I start a crowdfunding campaign. And these are the additional kinds of things that are going to be important. Other things that are going to be important are certifications. So there are companies out there like, Dun & Bradstreet. There's this new company called CrowdCheck and Early IQ. And they're going to do background checks on information as well. They're also going to check things. For example, if someone in your management team said they were a graduate of Harvard or Stanford, they're going to actually go and confirm that information. And then there's companies like TrackLight, and TrackLight is intellectual property protection, because now you are putting your intellectual property out in a public way that people haven't done that way in the past. So there are companies that are coming out with all these different certifications. And what we've done, we've taken this and we have created, so once you've gone through all of this disclosure and planning, and you've filled out the crowdfunding report, and you've determined that you want to present in the hatchery, you can then move into the hatchery. And the hatchery is a private network of crowdfund compliant entrepreneurs. It's going to be. I mean, this isn't even public yet. This is a brand new entity that we're building. But the idea is to build a pipeline of 1 million crowdfund compliant small businesses before it's legal to crowdfund. And why is this important? Because we don't have any inventory. If you think that there could be 200 or 300 funding portals in the marketplace, and many, many broker-dealers out there looking to continuously every 30 days raise money for these issuers, they need to find quality deal flow. And the entrepreneurs that are running businesses today and the startups that are starting out don't have audited and certified financials. They don't have valuations done. They just don't have a lot of the information that they would now be required to present to the SEC. So what we want to do is get them prepared ahead of time. And all of those things that you saw in the hatchery registration, they're now able to disclose this information in this hatchery, and the audience that they're showing it to are funding portals and broker-dealers. So we're going to have a directory of funding portals and broker-dealers on the one side of this, and the other side is going to be a marketplace of crowdfund compliant entrepreneurs. And we're going to create essentially a matchmaking, sort of like a monster.com, where people with MBAs can meet up with employers. And then once they find the perfect funding portal or broker-dealer for them, then they move out of the hatchery and go start a crowdfunding campaign. And this is really important because the funding portal and the broker-dealer know that they have a quality deal, potential deal to invest their time and their money in, and increases the chances that this company will become, will be able to raise the money. The other thing that we did is we created this bar. So the more of these things that an entrepreneur invests their time in, meaning setting up a Facebook page, Google+, a cloud score, getting verification on the information, these are all weighted so that this bar grows. It's almost like the way LinkedIn works. And And so when a funding portal or broker-dealer comes to the hatchery, they can search by the corporate structure, these completed evaluations, the funding amount, and then of course the different categories. And we'll also be adding some deeper dive type of search functionality into this. But the idea is that funding portals and broker-dealers can start to advertise in a closed environment where they'd have a greater chance of finding quality deal flow. And entrepreneurs will have a greater chance of matching up with a funding portal that's more applicable to them. For example, if you had a pharmaceutical product, you might be better off with Health Funder than with Crowdfunder. But if you didn't know there was a funding portal called Health Funder out there, then you might settle with another funding portal that may not really be working in your best interest, or they may not have the investors that are applicable to you. You know, somebody like Health Funder may already have a whole bunch of investors that have decided they want to invest in health-related products and services. So this type of matching up and exposure is going to be critical once it's legal to crowdfund, because I fear that there's not going to be enough inventory, a pipeline, a constant continuous deal flow if we don't have this kind of inventory created ahead of time.
So Ruth, we had a question here. One is, are the disclosure laws finished and fixed, or are they still changing?
So hold on a second, where are we here? This is all the law. So what we know is you need to have a business plan and the anticipated plan of the issuer, and you need to have the valuations, and you need to have the financial statements. The targeted amount you want to raise, all these things that are in this report are the law, and they won't be changed. What will be changed is how we get this information to the SEC. So for example, one of the things that we have in the funding roadmap is we have loan applications, because funding roadmap is a generic reporting system. So imagine if this was an SEC form and it could have an approval number and a date and things like that on it. It obviously looks different than my form, but at least if you filled out my form, you could easily copy and paste it into this form, and you would be much further ahead than if you started this whole process from scratch. So this is what we know to this point. We know, the amount of money. You can't raise more than $1 million. These things are not going to change yet. No, we may go back to Congress and try and get them to change some of this stuff. But we need the SEC and FINRA to become to start to build the rules and allow crowdfunding, even for accredited investors to start.
Well, that's something I'm always interested in. Is you're close to the SEC and FINRA and how they're doing. Can you give us an update of what you see going on there with the rules?
So they were supposed to pass a law about lifting the ban on general solicitation in July, and they missed that. That was 90 days after the Jobs Act was signed. They again told us they were going to get it done by August. They didn't. We're still waiting on that rule to be lifted, that ban to be lifted. And now it's almost January 1st, which was the 270 days they were given to complete the entire all the rules for the entire Jobs Act, Title III of the crowdfunding bill. And here we are. We're still waiting. I'm involved with two organizations, SIPA and CIFRA. CIFRA was just in Washington, D.C. The week of the 15th of November, meeting with the SEC. We had meetings with them, and we're still not getting a clear understanding of how long this is going to take. But we're frustrated because obviously, our forefathers wrote the entire, Declaration of Independence in 116 days with a felt pen, with a feather pen and ink. So it's kind of inexcusable to us that it should take this long. But this is the government we have to deal with. So
Right. So we had a question here. It says that I understand we're liable for any misstatements. How do you protect against misstatements in these submissions?
So, and we can't protect against misstatements, but what we can do is make sure that you actually are stating the right information ahead of time. So you are giving information, you're taking a really deep dive, like what is the intellectual property advantage? I mean, these are questions that will help the entrepreneur to have a much better understanding of the investment they're making. And if you don't get this deep into it and you just do a simple little executive summary type business plan, you're going to open yourself up for those kinds of problems because there isn't any required disclosure in a traditional business plan. It's whatever you want to answer or write about, essentially.
So the next question is, what are the penalties for misstatements?
You could be sued.
Okay. Next question is, I heard that the earliest crowdfunding will go live is the end of 2013. Is that your understanding?
Well, here's the thing. The SEC has to come out with the rules, and then FINRA has to come out with how they're going to help process this, because it has to go through them. What we're saying is that FINRA should work in tandem with the SEC, and they should do this together, so when they finish, they're both finished, and then crowdfunding could start. But I mean, my best guess is that we're probably looking at the beginning of 2014.
Okay. I've heard a number of crowdfunding sites are partnering with broker-dealers to get going soon. What is your thought there?
Well, I think that's a really great idea. In fact, we have partnered with the broker-dealer. We partner with Gate Technologies. And Gate is a broker-dealer in New York who has been at the forefront of getting this, Vince Molinari, I don't know if any of you know him, at the forefront of getting this bill passed. And he's been working intimately with the SEC. And so what we're doing is we're building a joint venture platform, because they do the back end, the transactional, the escrowing, and all of that. And we have obviously the front end. So we're very excited about this partnership. And I would suggest, that everyone deals, if they can, with a broker-dealer.
So the next question says, so why doesn't everyone just use a broker-dealer and not wait for the SEC?
Because you can't crowdfund on the internet. There's a general solicitation rule that we're waiting for them to lift. That's the whole problem. You can't solicit to the general public until they lift the ban on general solicitation.
Okay, so the solicitation is the key issue there. And then, of course,
for accredited investors. Yes,
right.
For accredited investors.
Right. Well, there's also unaccredited investors, but it seems like that could wait. If we could work with accredited investors now, that would still give people some access to using these tools today. Exactly, and that's what we're trying to do, is just at least get them to lift the ban on general solicitation, and then we could work out a lot of the kinks in the process, and that would help them to feel more comfortable when they let unaccredited investors crowdfund. Okay, so what other trends do you see out there in the crowdfunding world? What are things that are happening that you see that's kind of interesting to see where it's going? There's all kinds of things going on. I mean, there's a cottage industry growing around this new industry of service providers, of different kinds of crowdfunding sites. They're getting very niche-y. They're getting like social conscious, green, women only, veterans only type of funding portals. There's, obviously lots more micro lending, and I just saw this new one called Lending Cloud, and they're actually creating a club that you can become a member of, and you can get royalties, which I thought was a really cool, interesting concept. So there's no rewards and there's no stock, but you get royalties. And I'm not sure how it all works. I just heard about it the other day. But,
we have the money. I mean, this is the thing that's really very upsetting, is that we have trillions of dollars that are sitting on the sidelines by not just wealthy Americans, but by average Americans, and they're not having an opportunity to become a first mover in a really great deal, and potentially have that, that big exit strategy someday.
So aside from lending, what other niches do you see taking off?
I think it's going to be really big in colleges and universities, because there's so many. You have sororities and fraternities, and you have kids with these great ideas, and they have a crowd. They already have a crowd. They have people right there. And so I think that crowdfunding is going to be very big in colleges and universities.
Okay. Do you see crowdfunding being just niche by application, or do you think geography will also be a key element?
No, I think geography is going to be a key element too. I think people are going to look in their community and see the need for a particular business, and then when they, then they can collaborate. They can find people with skills, and they can decide to support that idea, to be able to see that particular business come to life in their community. And that's something we've never had the ability to do. We've always waited on businesses to show up, but now we can actually create them ourselves.
Interesting. So what other trends are you seeing in the crowdfunding world out there?
There's lots of companies doing crowdfunding promotions, crowdfunding, like campaign developers, people you can pay to do your campaign for you. Obviously there's crowdfunding bloggers. Like I said, there's a whole sort of cottage industry now developing. I'll give you an example. There was 1,600 URLs in April. There's over 8,000 of them now that have the word crowdfunding in them.
Well, crowdfunding has been done overseas for several years. What lessons can we learn from that?
Well, one thing we can learn is that we shouldn't be concerned about fraud, because the fraud is almost negligible. And all this fear-based fraud conversation that a lot of people want to continue to perpetrate is baseless. Because especially in equity-based crowdfunding, you're going to have to give people your social security number, your driver's license number, a pint of blood, audited financial statements, all kinds of things. And a criminal is not going to take that deep of a dive and risk being discovered as a criminal. Number one. Number two, when you are in a funding portal and there's an open chat to all of your social networks and people that know you from your past, that you have a criminal background or that you're a shady person or whatever, it's going to be real easy for them to get into that chat room and say, hey, I would never invest in this guy. I know him from whatever, and he did this thing. So criminals don't usually come out this public, and this is a very public way of raising money. They usually go in the back, and they slime around, and they try and do deals where no one knows about it, and get away, so they can get away with something.
In the prepayment rewards crowdfunding world, we've heard it said that your ability to raise funding is directly proportional to the size of your network. Is that also true in the equity-based raises?
Absolutely. In fact, we encourage people to spend as much time as possible building social capital so that they have a large fan base of followers and fans and friends to be able to get their first 30%. We encourage people to get 30% of their raise pre-committed before they start their campaign. And also, statistically, 80% of a raise on crowdfunding today is one friend away from you. So one friend away from you is what normally funds a campaign. So if you don't have a lot of connections and contacts and you haven't spent a lot of time networking and building a lot of social capital, then we highly recommend that people do that.
And what's the best way to build social capital?
Well, first of all, you have to set up a Facebook page and a Twitter page and a LinkedIn page, and you have to obviously go out there. You know, one of the things that I did was I would go to an article, say in Inc. magazine, and I would leave a comment, and then I would have a link to my website so people could read the comment and then click on it and go back to the website. And when they got there, then they would see, you know, see all these little buttons like Facebook, you know, there's Facebook, Twitter, and they just click on it and they go right to my Twitter account and then they follow me. And you can see I have 32,866 followers just on this one account. So this is one way to do it. It's really easy. Obviously, you know, you can use hashtags. I mean, hashtags are really good because they stick to a particular subject in social media. So if you want to talk about crowdfunding, for example, in Twitter, you just put the # and you put the word crowdfunding and search it, and all the people that are talking about crowdfunding will come up, and then you can follow them. See, every one of these people have the word crowdfunding in their tweet. So you follow them because you know these people are actually concerned about crowdfunding. I mean, here's a funding portal, and then they will follow you back. You will have a higher rate of them following you back because you're both interested in the same subject matter. So you could go through all of these people that are tweeting about crowdfunding, and you could follow them, and then essentially they might follow you back.
So what do you think the effect is going to be on future investors? We've been talking about the entrepreneur side of this, but what's the impact on the investors?
Well, you know, this is an interesting subject because, you know, historically, 80% of small businesses go out in the first 3 to 5 years. They go out of business. That's just the way it is. It's very risky. And one of the reasons is because they don't have a really good, solid plan. They're able to get funding with a, you know, a napkin or, you know, an executive summary, and then that money is then leveraged to get more money and more money and more money. But having a really detailed explanation of how they're going to build this business at a granular level, at a believable, defendable level, like what we do with Funding Roadmap, it hasn't been done traditionally. And we think that type of reporting is going to be, and this type of planning is going to be necessary in crowdfunding when people are competing for the attention of the average American who doesn't have any experience investing in small businesses. So if they wanted to have less of a risk, then they will ask all the right questions before they put their money into a deal.
So next question is a little bit different. It says, how long does it take to prepare for a crowdfunding campaign?
So it all depends. Do you have you know, are you incorporated? Do you have a DBA? Do you have a bank account? Obviously, you have to fill out, you know, a business plan or the funding roadmap. Have you created a valuation for your stock? You obviously have to have the stock first. If you look at, for example, the Apple store, the App Store, where all those kids are building those apps, there's probably, you know, 750,000, maybe there's 1 million apps today. You didn't need to get incorporated to build an app. You don't even need to be a business. You can go and build an app, send it to Apple. 3 weeks later, they can approve your app and put it in the Apple store, and you can start getting paid as just a person, like a sole proprietor. And you never have to get incorporated. You never have to do anything. Well, if any of those people wanted to crowdfund, none of them would be ready because they wouldn't have met all this disclosure. So really it depends on how much of this work you've done ahead of time.
So how long does it take to raise $500,000 through a crowdfunding campaign?
There's no time. This isn't you have a limited amount of time. You have 30 to 60 days maximum, and mostly it's 30 days. So if you don't have a lot of fans and followers and friends, you probably won't raise the money at all.
Well, that's true for prepayment rewards. What about equity-based?
I'm not sure if I understand the question.
Well, if you're raising money with Kickstarter, that you have a time frame in which you have to put on it. Is that going to be the same dynamic for equity-based crowdfunding as it is for prepayment reward crowdfunding, or do you have more time with equity or less time?
So the timing issue is going to be contingent on the funding portal that you work with, but the fact of the matter is that the funding portal isn't getting paid unless you can prove that you can raise the money. And if in the Jobs Act, it says that if you don't raise all the money, you have to give it back. So if you want to raise $500,000 and you only raise $450,000, and the campaign is over, you set the campaign for 30 days or 60 days, and it's the last day of the campaign. If you're short $50,000, you don't get any of the money. And not only do you not get any of the money, but guess what? The funding portal that helped you with this campaign, they don't get paid either. So they're going to have much shorter campaigns. They want to see proof of concept or proof of of ability early on. I'll give you an example. On Kickstarter, some of you may have heard of the Pebble Watch. The Pebble Watch started their campaign on day one. It was a 30-day campaign. They raised $1 million in the first day, and it was a reward-based campaign. And what they did essentially is they said, if you give us $100, we'll give you a watch that's going to retail at $150. And they did a really big PR campaign weeks and weeks before they went live on Kickstarter. And by the time they went live, there was a lot of people that were interested in this watch, because the watch hooks up to your iPhone and allows you to sort of use some of the functionality without having to take the phone out of your pocket. You can use it right from a watch. So this was very attractive to a lot of people, and they thought, well, I might as well give them the $100 and not have to pay $150 later when they finally open up the store or sell it. So 30 days later, they raised $10 million from 68,000 people invested in the Pebble Watch campaign. And what was supposed to be $100,000 ended up being $10 million. Because these people spent a lot of time beforehand building up awareness about their campaign, social capital, and they already had a fan base that was excited about getting into this deal before they ever started the deal. And that's really the trick of the whole thing.
Cool. So are there any other questions out there, guys? I've gone through most of them already, and let's see if there's any other questions. What else do you want to share with us, Ruth, as we wrap this up?
Well, I just want to tell everybody, we had this boot camp in October last year. We're going to do it again. We were written up all over in Forbes and Inc., and we had some amazing people that came and spoke. Peter Shankman, who launched Help a Reporter Out, was our keynote speaker. And Jed Cohen from Rocket Hub was there, Candace Klein. We're going to have these same people back again and a lot more, and it's a really exciting event. I encourage all of you to come and learn next year about what we're going to do.
Right. Yeah, I attended myself, and I found it very helpful. It was a great setting there in Vegas, and it seemed like we had a good audience. We had over 200 people there, it seemed, and that about a third were investors, a third were building crowdfunding portals, and a third were entrepreneurs who wanted to raise funding. And so it was a very good mixture of all the elements of a crowdfunding site. Learned a great deal about building crowds, and I saw a lot of new tools coming out that help you manage crowdfunding. And the stories I've heard from other people, we've had Paul Tro of Replay Games come on to our webinar, where he raised over $600,000 for his video game. 14,000 people put an average of $35 each into a prepayment for his video game. But he was just using basic email, basic video pitches. He was changing the pitch every 3 days, but he was spending 18-hour days doing this 30-day campaign. And the tools that were in place really weren't there to, support him as well as he needed it to be, I thought. And I'm glad to see you're coming up with tools, Ruth, that can help people manage this process, because it's a tremendous amount of work that has to go into it. And to have a disparate set of Excel spreadsheets and Outlook and email accounts and so forth that are not integrated can make it very tough. And of course, you've got the next layer here with disclosures for those raising equity, that it's really going to be critical. As we surveyed our database, we found the majority of people are wanting equity-based crowdfunding. It's nice to do the Kickstarter thing, but down the road, they really need to get into the equity side of it. So we're all watching the SEC to see when we can use the advertising piece, when can we use the unaccredited investor piece, and as it comes out, it's going to open up the door to more people working with this. I've also noticed investors starting to really gravitate to this as well. 5 years ago, you had asked me, would an investor make an accredited investor, would they make an investment decision based on a website? I would have said no way, but today I'm starting to see people become used to that. You become starting to make follow-up and some decisions based on what they're seeing through webinars, web portals, etc. So it's coming more and more for investors as well. So anything else you want to add to that, Ruth?
No, I just wanted to just encourage people to check out, the funding roadmap, because it's a very simple but comprehensive business planning tool and reporting system. It's only $60 a year. It's extremely easy to create GAAP-compliant financial statements. And again, if you're required as a funding portal to review certified and audited financial statements, I can't imagine how you're going to do that if there's no kind of standardization. So, this is really the way that, imagine the IRS having to look at all of our tax returns without some kind of standard reporting forms. That would just be a complete nightmare.
It would be. All right. Well, I think you are also going to come to the Austin Crowdfunding Conference on January 8th.
Yes.
You tell us about that?
Yes, we're going to Crowdfund Texas. If you want to go to check out crowdfundtexas.com, and we're going to be there. So is the Crowdfunding Professional Association, and I encourage all of you to join the Crowdfunding Professional Association if you want to, get really involved and know what's going on with this industry. We're going to be there. We're sponsoring it with Crowdfund Texas, and with Chris Camilla, who is creating a documentary, actually the first documentary on the history of and future of this new industry. So he's going to be there with his camera crew, and it's going to be a very exciting event in Austin, and I look forward to meeting a lot of you. So if you're going to be there, please come up and introduce yourself.
Great. Well, we look forward to seeing you here in Austin on January 8th, Ruth, and thank you for sharing your information about the industry and about the crowdfunding roadmap. We appreciate that, and we'll record this and place this on the website for anybody that wants to go back and look at some of this information. And of course, if you go to Crowdfunding Roadmap, you'll find Ruth's contact details there. And with that, let's go ahead and close it out for now. I don't see any other questions coming in, but I'm sure people will have more in the future, and we'll go from there. So you guys have a great weekend. Thank you for joining us.
Thank you so much for having me.